Hello and welcome. I'm Abhishek Singh, and you're watching Market Movers, a must watch show if you want to make bumper profits, enter into the right sectors at the right time, and find out when to book the profits. So, whether you're a serious trader or someone who trades part time, I promise you, in under 10 minutes, if you watch the complete show, you'll walk away with all that you need to know about the stock markets, including what moved the markets today and what's likely to happen tomorrow. So let's dive right in. As always, we have with us Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher. Welcome to the show, Ms. Parekh.
Hi, Abhishek. Thank you and pleasure as always.
So the day after budget, yesterday the market was sort of trying to make up its mind. It did dip a few hundred points, but gave a closing above 24,400. Today, the assumption was that the two big triggers this year, one was, of course, the general elections. So we saw what happened on the exit poll day. And the second big trigger was going to be the budget. So the two big triggers for the markets are out of the way. And the assumption was that after this, the market will sort of, choose a direction and start moving in that direction. Uh, we can't see that happening in the markets. I mean, Nifty 50 is trading about 60 points below its last close.
So I would say right now what we concur is market has got into a sideways move.
Yeah.
The traders really need to sink in all the changes that, well, as far as the taxation and all that is concerned. But for now, on broad base, let's talk about Nifty. So 24,400 is still held on. Even the volatility index is quite stable. Also, the advanced decline ratio is quite okay. So I guess there is not much of a worry to think of right now. Bank Nifty has been quite a laggard for now. So it is more so today we saw pharma index, metal giving a bounce back. So stock specific is the way to go right now as far as we are talking about the market on the whole. It's very difficult to trade in Nifty and Bank Nifty right now.
Yeah, market is taking its time to compute and analyze everything that was proposed by the finance minister in the budget yesterday. Having said that, a few interesting things. I mean, some of the stocks are, of course, back. They're in the green. For instance, MMTC today hit the upper circuit.
Oh, definitely. That has been one of my favorite stocks. We've been recommending right from, lower levels. And today also we are seeing it has closed at upper circuit. So I think it's given a breakout above 101 and it sustained well because the circuit still continued. So I think the longer term projection, what we are looking at would be now around 150 and 90 acts as a crucial support. So likewise, if you see even HCC, I mean, I've been tracking it since yesterday because infra was always on our mind. And if you see HCC, it has also sustained well above the monthly breakout. So that also looks very promising, and we saw a good run up. So right now, more than the front line, I think mid caps are giving us good returns once again.
Right. And as far as MMTC, and in fact, for that matter, even HCC is concerned, would you advise fresh entry into these stocks?
MMTC closed at 102. So if by chance we are lucky and we see this stock retracing to around 90 levels, that would be a good buying opportunity because now we are looking at longer term price projection. Short term traders, of course, need to be worried at these levels. Similarly, HCC, we time and again, in fact, even yesterday, well, I thought, it was worth considering at 47, 48 levels and, just as a chance because the trend was pretty decent. And now
Right.
that I'm looking at it closely, monthly chart breakout comes at 42. So depending on your time period, the period that you are ready to hold, I would say one should accumulate these stocks because the longer term trajectory comes to 65 and 100 levels. So well, it's time to cherry pick once again and go into new round of choice of stocks because we won't see a new runaway rally in, the rail stocks. So right now, it's all a different scenario what we are looking at.
Right, right. Now, of course, let's start talking about the stocks that you are going to recommend to viewers for tomorrow. So please.
Sure. So before I start with that, I would also give my view as to what calls were given yesterday. We had focused on LTTS.
Absolutely.
It opened strong. We saw a good run up coming to 52, 250. And I think my view still remains the same as far as we are following the levels. Protean also was recommended. It surged very well. We saw a good, strong upward move. So my bias for the view for 2000 level is still intact. Now the new stocks that I would now look at is one is exchanging solution that is also in the cash category. Uh, well, I'm recommending at around 137 with a stop loss of 125. I would be looking at a target of 170. The other one, which we have also recommended to our clients this morning, is GMDC. If you see the stock, it has just been in a long consolidation, sitting on a cluster of moving averages. There is good volume surge also. So I would, we have recommended at 411 itself, 409 or something. We saw a good spike coming in. So we would look at a target of 460, 470 as a positional trade, and I would look at a stop loss of 375.
Right. It's been consolidating since October last year. Uh,
Yes.
all right.
So I think this stock calls for attention, and I think once we see this stock moving above 430, 440 levels, it brings in a lot of confirmation and conviction for higher targets.
All right. Uh, Thank you. Thank you for taking out the time, Ms. Parekh, and talking to us.
My pleasure as always.